Hello, welcome to the weekly LSR View. Since March, our main investment theme has been yield-seeking strategies rather than growth-seeking strategies. And in this context, our particular focus has been on emerging markets, where 4 years of sell-off have left EM assets looking considerably cheap. Our main rationale for the constructive view and carry in general was a combination of risk mitigating circumstances. On the one hand, China was stabilizing, and it has been stabilizing. On the other hand, the dollar has been softening as the Federal Reserve has yet again pushed back policy normalization in view of global events. And at the same time, the world has found itself with an excess of $10 trillion worth of negative yielding sovereign debt, creating an intense demand for positive yield across the world. And this has benefited EM a lot. These factors explain why EM to a large extent shrugged off Brexit as a risk event in the wake of the UK vote at the end on the 23rd of June. On the one hand, there's been no financial contagion from the Brexit vote. On the other, you've had policymakers becoming more cautious, with expectations being more of policy stimulus rather than policy tightening. We think this benign mix of factors can stay with us for the time being and help EM carry. What is the main risk? Well, again, a tightening in global funding costs, aside from the usual risks of a liquidity event or a significant slowdown in the global cycle. And for that, we need to watch what happens to inflation. If we see sustained and large upside surprises in inflation, that could be bad for EM, as it would push DM costs of funding higher. But we think that is more of a risk for next year rather than this. Till then, we think the party can go on. Thank you.